What's going on, everybody? Welcome back to the channel, and in today's video we're going to be talking about trading patterns. But before we get into it, make sure you hit that subscribe button, smash that like, and click the notification bell so you don't miss any of these great tutorial videos or urgent market updates that we will be uploading to the channel. Now, when it comes to trading patterns, there's a bunch of different types, right? You have bullish patterns, you have bearish patterns, you also have different classifications of patterns, right? You have reversal patterns, you have continuation pattern, and then you have neutral patterns. A continuation pattern indicates that the trend will continue in the same direction. So if you're in a bullish trend and you get a bullish continuation pattern, you can expect price to continue on the current trend. Now, with a reversal pattern, you find these at areas where trend reverses. If you're in an uptrend and then reverse to a downtrend, these reversal patterns happen at the peak of an uptrend or at the bottom of a downtrend. And then you have neutral patterns. Now, neutral patterns don't typically break up more than they break down or break down more than they break up, right? Neutral patterns are patterns that indicate that a breakout may happen, but there's no favor to either a breakup or a breakdown. So today we're going to be taking a look at a few reversal patterns, right? I'm going to make a series on patterns, but for today we're just going to be focusing on reversal patterns. So I'm going to show you a couple of different types of reversal patterns. So without further ado, let's jump into the charts. I'm going to show you guys a couple of different examples of different types of reversal patterns. I'm going to show you some bullish reversal patterns and some bearish reversal patterns, what they look like, and I'm going to show you guys how you can identify these on the chart, and I'm even gonna show you how you can trade these patterns. Let's get into it. So we're here on our Bitcoin 1 hour chart, and the first reversal pattern we're gonna be looking at is a double top. So with double tops, what you're gonna be looking for is price to come up to a resistance point, reject off of it, come back up to test it again, and get rejected a second time to reverse the trend and start to move down. So as you can see here, we do have price coming up, right? Generally, right? We stagnated here a little bit, but we're generally coming up, and we rejected off of this point once, right? And then we came down and we came up to test it again, and we get rejected again before we start moving into a downtrend. So pretty simple to spot, right? This is a pretty simple pattern, right? So you get rejected once, you get rejected twice, and then you get the reversal, right? So it also kind of makes this M pattern, right? So this is a bearish reversal pattern, right? Because a double top, you test the resistance twice before coming down, so it indicates a bearish reversal. Now, how would you go ahead and trade this? So if you draw a trend line, right, you see you come down and you reject off of this area right here, and you can kind of call this the neckline of the pattern, right? So when you're trading a double top, basically what you want to see is you want to draw a line where price came down to and bounced off of to the upside. So right here, right, we came up, we rejected, we came down, and we bounced at this level right here, and you can draw a trend line at this level, creating a neckline, right? So basically how you would want to trade this, some people would wait for you to break support here and you would enter a short position expecting price to continue downward. However, that's not always the best way to do it. Basically what you're going to want to do to add a little bit of confirmation and to enter the trade in a little bit more of a safe way, what you would want to do is you would want to wait for price to break the neckline and then come back up and retest the neckline as resistance, and then that would be your entry point, right? So you wait for price to come down, right? And then you come back up to test this neckline as resistance, and then that is where you would want to enter the trade. In this specific example, if you did short it from this area here, you come down about 4%, right? You know what I'm gonna say, throw a little 10x leverage on that, right? And you can make 40% profit on that trade. So you do just want to remember you can enter as soon as that resistance breaks. However, it would be a little better to wait for the price to come back up and test this as resistance. So just want to keep that in mind. Now, for our next example, we're going to be taking a look at a bullish reversal pattern, and that is a falling wedge. So what you're going to want to do with a falling wedge is you're going to want to be looking for price to be in a downtrend, right? So you can see right here, we are making lower highs, right? So there's a high here, a lower high, right? So you can tell we're in a downtrend. So you want to be able to draw this downward trending line, and then you're going to want to draw the second line, which is going to be the support level for the wedge. So that's going to be right here, you can see we're generally respecting this area as support. As we bounce right here and here, we respect it there, right? So this is the level of support. So you want to draw your resistance, your downtrending line acting as resistance, and then you're going to want to draw your support line. And as you can see, these lines are squeezing together, right? These lines are going to converge, right? So price comes in, you come down, you bounce up, you bounce down, you bounce up, you bounce down, but each bounce is getting less and less volatile, right? You can see you're making lower highs and price is kind of getting pinched inside of this wedge. Now, this is a bullish reversal pattern, so you would want to be looking for a break to the upside. And as you can see, we did break up out of this pattern, right? And how do you trade this pattern? Very similar to the other patterns. You're going to want to wait for a breakout, and you can try to enter a trade on the breakout, but as I said, you do really, ideally, you do want to wait for price to do what it's going to do and then come down and test this previous line of resistance and test it as support. And then you can see you would enter your trade on that retest, and we did flip the resistance into support before coming up to higher prices. And this area right here is where you would want to enter that trade. Now let's go ahead and just measure it out for fun. And look at that, you could have got another 7.6% profit or 76% profit with 10x leverage, right? So it's the same thing with the falling wedge. Is you're gonna want price to break out in the direction you're looking for, and then you want it to retest the resistance as support, and that is where you would enter your trade, and you could have gotten that 7.6% profit. So, you know, typically when you have patterns that are formed in a downward trend, you can expect an upward breakout, right? Those are usually the bullish patterns. Like this is a falling wedge, we're in a downtrend, so the breakout is to the upside, as opposed to a rising wedge, which would break out to the downside most of the time, right? Because you're already in an uptrend. So typically when you see a pattern that forms in a downtrend, you can expect a break to the upside, and vice versa with patterns that are formed in an upward trend. Now, the last pattern that we're gonna be looking at is going to be a double bottom, right? And double bottoms are bullish reversal patterns, right? So when you see a double bottom, you can expect price to reverse to the upside. And very similar to double tops, you're gonna be looking for the same thing except flipped upside down. So instead of an M shape at the top of resistance, you're gonna be looking for a W shape at the bottom of support, right? So with the double bottom, you come down, right? And then you bounce off support once, and then you come down and you bounce off support twice before moving to higher prices, right? So you get that little W formation, you got your first bottom here, your second bottom here, and then you move up. So obviously you would trade this exactly how you would trade a double top. So you can set your neckline at the top of where price bounced off of that first support, right? So you came down, you had your first bounce, you came up to here, that's where you can draw your neckline, and then you came down for the second bottom here. Now, you would trade this in the exact same way as you would trade any of the other examples that we went over today. And you could trade it on the breakout, right? But I always say, you know, you want to wait for that retest. So you came up, right? You broke out, and then you came down. You didn't quite touch that, you know, level of, you know, that neckline as support, but you came down pretty close. So you would go ahead and enter your trade as close to there as you could get it. And then obviously you kind of zigzagged around, but generally you went up before rocketing off to higher prices. So let's just go ahead and see where this trade could have brought you. You know, if you did enter right at the neckline, and you know, you could have come up to about here for 13% profit, right? Again, you know, I'm gonna say it, 10x leverage, that's gonna be 130% profit. So very, very powerful when you see, you know, any of these patterns. Now, for taking profit with these patterns, the same rule applies to most of our other strategies where you're gonna set it above the last swing high in a long scenario, right? So you see, you do have this, you know, a swing high back here, and you know, from the neckline, that would give you about 3% profit or 36% profit if you're using leverage. So you can add your first take profit there, take some money off the table, and let the rest ride. But yeah, taking profits, you can take them at spider lines. The taking profit is gonna be more up to your risk management, but this is basically how you trade these patterns. And I just wanted to show you guys and give you an intro to these reversal patterns. There's a lot of different types of reversal patterns. These are just a few of them. So I think that's all I got for today's video, guys. I did just wanna cover a couple couple of these reversal patterns. You know, the double tops, the double bottoms, the falling wedge, these happen on the charts very often. So I just wanted to show you guys how you could spot them. And then when you do spot them, how to trade them correctly, right? You don't want to enter on the breakout. You want to be patient. You want to get the breakout and then wait for the retest before getting your entry. So go hit the charts, go look for a double bottom, go look for a double top, try to find a falling wedge, get on Femex and enter a trade. Try this strategy out, try to trade some of these patterns and make some sweet profits. With that being said, guys, that's all I got for this one. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the